Hello and welcome. You're watching Business Plus. I'm Shweta Kothari. We're bringing you stories from the world of business, policy and economy, beginning with markets as usual. Sitting with me in the studio is my colleague Suyash. Suyash, markets once again closed in the red, profit booking seen for third consecutive day today.
Yes, Shweta. So Indian markets continue to remain under pressure, mirroring the global trend in equities after Fitch downgraded US's credit rating. Now, both indices were down as much as 1% today in intraday trade, but they paired some losses after a string of positive earning reports from Indian corporates, especially the heavyweights from the Nifty pack came out, and it seems that it offered some respite to the investors. Now, at close, Sensex was down about 65,240 levels. It was down 0.82%. Meanwhile, Nifty ended 0.74% lower at 19,381 levels. Now, mid cap and the small cap index, which were also trading in the red, paired losses and then some and ended in the positive territory in today's session. Now, Nifty mid cap 100 was up about 0.25% and the Nifty small cap index was up about 0.12%.
All right, let's also quickly introduce our guest Kranti Bhatini from Wealth Mill Securities joining us at this point in time. Kranti, thanks very much for taking time out. I want to begin by understanding what are you making of Asian markets, Indian markets, registering profit booking, ending in the red for third consecutive session now.
Hi Shweta, good evening. The Fitch factor is playing the role right now, and the markets across the globe has been trembling right now. They're drifting down. We can see some kind of profit booking and foreign portfolio investors are exiting equities at this point of time, but it's not a cause of concern at this point of time. It's a normal course of profit booking at this point of time. And after there is a tremendous rally in the market, okay, any negative news or any news that surfaces, okay, that creates some kind of knee-jerk reaction to the market. That's what we have been witnessing in the markets. But it's a good opportunity. Markets, even though the current trend, last 2 days, 3 days, trend is in a negative trend, but the longer term trend is still up, and the market texture is not changed right now. It's in a positive mode only.
Okay, markets in a positive mode. Also, quickly run us through, Suyash, the top gainers and losers before we go to a list of earnings. A lot of company there dampening your Thursday, I believe.
Surely, Shweta. So, when we are talking about the gainers, Adani Enterprises, which came out with its Q1 results today, was among the top gainers. As you can see, it rose about 2.48% in today's session. Now, another Adani stock, which is Adani Ports, also saw some positive buying action, and it was up about 2.14%. Eicher Motors, which is also due to come out with its results, Q1 results today, was up 1.51%, whereas DV's Lab was up 0.88%, tracking a positive momentum in pharma stocks. Now, among the top losers were Titan, which disappointed the streets with its June quarter results. It was down about 2.39%. ONGC, which fell about 2.36%. Bajaj Finserv, which was down 2.35%. ICICI Bank, which was down about 2.07%. Now, among sectoral indices, most of them were under pressure in today's session. Although Nifty Pharma bucked the trend, as you can see, it was up about 1.04% in today's session, whereas Nifty Bank and other financial stocks saw some profit booking today. Nifty Bank was down about 1.07%, and Nifty Private Bank was down about 1%, whereas Nifty PSU Bank also fell about 0.5%. Now, among other losers were Nifty Auto and Nifty IT, which were down about 0.32% and 0.24%. FMCG stocks also remained under pressure today and were down about 5.8%.
All right, let's quickly move on to earnings now. One of the top earnings that we're tracking is that of Adani Enterprises, the flagship Adani company. Run us through the numbers.
So, Shweta, Adani, right before we went live on the show, Adani Enterprises came out with its numbers. As you can see now, Adani did post a good beat, and we saw a significant spike in the stock prices also. The stock ended as the top gainer, up about 2%. So 44% year-on-year jump in net profit at about 674 crore. versus 469 crore in the year ago period. Revenue, however, dropped about 38%, which Adani has attributed to a rise in coal prices. So revenue figures stood at about 25,438 crore versus about 40,844 crore. Now the margin figure, Shweta, 554 basis points jump we saw from 4.36% in Q1 FY23 to 9.9% in this particular quarter.
All right, Kranti, what explains these massive earnings? And also for the Adani group of companies, a company that was facing immense allegations, pressure from public, sometimes even in the public discourse and from investors, seem to be doing really well. All 10 listed companies, of which results have come so far, have been positive.
Yeah, Shweta. Yeah, the results have been better than expected. Okay, and coming to Adani Enterprises today's results, even though despite the fall of around 38% with respect to the revenues are concerned, 25,810 crores, the fall is significant in terms of revenues. But well, coming to the profitability, they have posted 44%, 45% EBITDA margins and profitability. So right now, the companies have been focusing on more on profitability right now. Okay, the focus is to make the companies productive and profitability. That's where the focus is right now for the management. Coming to Adani's with respect to the long saga, the news, all the stocks have been turbulent from quite a long time. But what we have witnessed is the investor confidence has coming back right now. The company has taken measures to restore the investor confidence. One hand, they are reducing the debt and also trying to increase the corporate governance, trying to increase the investor confidence. That's the exercise currently is going on for Adani as a group at this point of time.
All right, Kranti. Another interesting earning that we are tracking this afternoon is that of Sun Pharma. Suyash, how are the numbers looking?
So, Shweta, Sun Pharma came out with its Q1 results just about an hour ago. Now, the profit on a year-on-year basis declined about 1.9%. Now, this was on account of a one-time loss of 323 crore. Now, if we remove that one-time effect loss of an exceptional item, the profit figure was actually in line with the street estimates. Now, the revenue figure and the EBITDA margins were great and actually beat street's expectations. The revenue jumped about 11% from 10,761 crore in the year ago period to about 11,941 crores. The margin also saw a 230 basis point jump. Now, US sales of the company has surged to about 471 million, which was ahead of estimates of about 440 to 450 million dollars in the previous quarter. Now, the company has invested about 680 crores in research and development in the June quarter, as against 460.8 crores in the previous quarter. Now, the shares of Sun Pharma were trading higher, as was the case with most pharma stocks. Now, they touched a 52-week high of 1,169 rupees in early morning trade, although the stock reacted negatively to the earnings report, and it closed up about 0.51% in today's session.
It did close up about 0.51%, margin up about 230 basis points. How are you reading these numbers, Kranti?
Yeah, seems to be what the worst is behind for pharmaceutical companies, and it's clearly demonstrated with Sun Pharma. And next coming 2 quarters results are crucial for Sun Pharma. Investors right now who are a little bit adverse and who have not taken the participation in pharma stocks, who have been waiting on sidelines. I think the time has come to consider pharma stocks in their portfolio, Shweta, after looking at the pharma stocks numbers.
All right, and pharma stocks there bucking the trend today as well on the Lal Street. Let's also quickly go to Dabur that came out with its results this afternoon.
So, Shweta, Dabur's results were actually in line with the street expectations, but the stock reacted negatively and extended its losses throughout the session, and it was down about 1.88% in today's session. Now, profit jumped about 3.5% from 441 crore in Q1 FY23 to 456.6 crore in Q1 FY24. Now revenue jumped about in double digits, about 11% to 3,130 crore. Now the company said the revenue growth was driven by a strong double-digit growth in the home and personal care segment and the healthcare business. Now the Q1 revenue growth of these particular segments stood at about 13% compared to the consolidated figures of about 11%. Now the company has reported an underlying volume growth of about 3% in India's FMCG business, whereas the consolidated EBITDA margin stood flat at about 19.3%.
All right, Kranti, margins is net, no increase, no decrease from the last quarter. FMCG business perhaps not doing too well as well. It was on the numbers are on the back of home decor, you say, Suyash?
Yes. The personal healthcare sector.
The personal healthcare sector. Kranti.
Yeah. Shweta, the numbers seems to be subdued at this point of time, and Dabur has been posting the same sort of numbers from past last 2-3 quarters. Okay, and the underperformance may continue for Dabur. They have been entering into the new geographies, but the numbers have been subdued with respect to Dabur is concerned. So the investors at this point of time, they can hold on to the stock, but not no fresh positions at this point of time with respect to Dabur is concerned, Shweta.
And before I let you go, Suyash, Varun Beverages and their quarterly earnings, how did that pan out?
So Varun Beverage was another FMCG company, but this time from the mid-cap space, which came out with its set of earnings results today, and they were better than expected, Shweta. Now net profit for the year jumped 26.2% on a year-on-year basis from 787.4 crore to 993.8 crore. Now revenue jumped about 13.6% to just under 5,700 crore from 5,017 crore in the previous quarter. Now revenue growth was, according to the company, was driven by better realizations. Although investors should note that the working capital days of the company, working capital days, which essentially measures the efficiency of a company to convert its net working capital into revenue. So it basically, how much time it takes to sell the inventory and to, collect the receivables. Now that came, the days of working capital days increased from about 17 in the previous quarters to about 21 days. Now this was as per the company on account of untimely rains. Although the stock did fairly well, it ended up about 1.79% in today's session. On a year-to-date basis, it's up 25%, and in the last 12 months, Shweta, it's up 75%. So Varun Beverage is making good money for its
making very good money, and untimely rainfall could have been a dampener, Kranti, with a large part of North India, and this is a story we covered here on News9, large part of North India not drinking as many beverages as they were likely to, given the summers were better than expected.
But Shweta, to be very honest with you, the stock has been a super performer. If you see the last 1.5 years, the stock has up more than 100%. The stock has been posting better earnings every quarter, and any dip in the stock, it's investor can need to accumulate the stock in a staggered manner, a proxy to the PepsiCo, and India is one of the growing franchises for PepsiCo in India, and this is the stock with a market capitalization right now touched 1 lakh crores. So any dip in Varun Beverages, investor with a long-term horizon, definitely it's a very good buying opportunity. But it's a fully priced in stock. That is the reason I advocate the investors. Any dip in the stock that gives in this market knee-jerk reactions, it's a good entry level for the investors who missed the rally in the previous 1 year. But still, the stock is going to do well. The new product introductions they are doing, and they are creating the buzz for Varun Beverages is concerned, and also the core business is doing extremely good.
Core business is doing well for Varun Beverages, reporting good numbers there, increase of 150 basis point in margins as compared to last quarter. Kranti Bhatini, thanks very much, sir, for taking time out for joining us in the newsroom.